Claudia O, video number 3, Federal Financial Group. I really appreciate the time that we have to get together today. I don't know if I'm gonna be able to help you or not, but we are gonna go through some areas that are gonna help you to increase cash flow, decrease debt, and reduce taxes. And we also specialize in life insurance, and we can show you how these ones can really shave off years of your retirement date. If there's any interest on your part, just let me know. I will get some information, we'll get back together and we will go through some specifics. But right now, there's really nothing you can buy. Just sit back and relax, okay? Well, I'm gonna tell you a little bit about our company. Federal Financial Group is a national company who represents different insurance companies and financial institutions, some of them with over $100 billion in assets, and also some of them, they have been in the market for over 100 years. And what we do is we teach people about money, how it works, and how we can make it work for you. And our goal here is to help you to become financially independent. And what that means is that the interest that you are earning on the money that you put away is gonna replace the money that you get from a business or a salary. And at that point, you are independent and you don't have to work anymore. You can if you want, but you don't have to. And that's financial independence. Would you like me to teach you how to get there? Perfect. So what I would like to do is to talk about some of the challenges and situations that we are living right now and some of the solutions. Like, for example, let's take a look at the past 10 years. Yes, salaries have risen, but also the living expenses are going up and up. And for many Americans, it's really very difficult to keep up with the living expenses. So what is happening is that people get into debt, and that generates lacks of security, poor saving habits, and that's exactly where the problem starts. And well, this is my point. Imagine that we have 100 people in this room. How many people do you think that they are gonna become financially independent at the age of 65? Can you guess? Well, just 4. That means 96 people are gonna face 3 things. 1, they are gonna rely on family. 2, they are gonna rely on charity. Or number 3, that is gonna be the majority of them, they are gonna be still working. And that's what is happening. Do you remember the people working at Walmart? Senior people? Well, now we have here the solutions. What we do is that we work in key areas involving 7 steps, and that are going to help you to build your financial future. These steps are going to help you to increase cash flow, decrease debt, reduce taxes, and the most important, they are going to help you to retire as soon as possible. So the goal here is to get financial independence. So I'm going to go through all these steps, and if you have please any questions, just stop me. If there's a need or an interest on your part, also let me know. Okay? Perfect. Step 1 is inspect what you spend. And what it means is that in order for us to have money in the future, we need to know where your money is going right now. So part of understanding how money works is to understand where are you putting your money right now. So we are going to introduce you to a tool that is going to help you to track your earnings and expenses. So in that way, you are going to know, you are going to inspect what you spend. And the goal here is to find all that extra money that you didn't know you have. And we can use that extra money and apply it towards a debt or towards your goals and dreams and your retirement plan. And that's the key in this step. Step 2 is cash flow. So, Mr. Client, what is your definition of cash flow? Yeah, you are right. Cash flow is monthly money that is coming in and out. And Let me ask you something. At the end of the year, do you get money back from taxes or you have to pay money? Well, that's really interesting because you know what? I have a client that every year he gets something between $2,500 and $3,000. And so I ask him, so are you telling me that you are allowing the government to keep your money for over a year and give it back to you with zero interest? That really doesn't make any sense. And he told me, you know what? Yeah, you're right. That really doesn't make any sense. And that's the point. We can show you ways where you can have that money and put it work for you and your benefit. Step 3 is under review, so we are gonna skip that one. Step 4 is very interesting. It's creating an emergency cash fund. And you know what? This is really important because what I have found is that the families and people, they really don't have an emergency cash fund. So what is happening is that if you have an emergency, let's say like your car is broken, what is going to happen? Those $1,800 that you have to pay for a repair, you're going to pay them with a credit card. And in 3-4 years, those $1,800, they are going to become $4,000. So in this point, we really encourage people to have an emergency cash fund. And it's really simple. An emergency cash fund needs 4 factors. 1, it has to be safe. 2, it has to be liquid. 3, it has to have a better rate of return than your checking account. And 4, it has to be separated and systematic. What we recommend is that probably you can get like a money market account and you can ask the bank to withdraw a monthly amount from your checking account, any amount that is comfortable for you, let's say $30, $50, drafting every month $50 from your checking account to your money market account. So that money market account is the money just for emergencies. Or have you ever tried to build a cash, an emergency fund inside a checking account? That doesn't work, right? Because it's free money. And we see it, we spend it. We use our ATM, we write checks. So at the end of the month, there's no money there and we spend it all. So that's our point here. So this is really going to create a system that you are going to have your emergency cash fund and it's going to stop you for using your credit cards and your balance is going to be zero. And the most important is really going to stop you for using the money for your retirement plan. And you are going to, you know that if you use that money, you are going to have a 10% penalty. So that is going to help you to build your future. The step number 5 is utilizing life insurance. Here is the goal is to protect a proper protection against the loss of a life, which leads of the loss of an income. So let's see, imagine this, a happy family, the mom, the dad, and 3 kids, and suddenly that is gone, and income is gone too. So what is going to happen with that family? Those kids, they just lost that. They are going to lose the house. They are going to lose the schools probably. Bills are piling and the probabilities are that they are probably going to lose mom too. Why? Because now mom has to work 2 jobs to support that family. So in this step we do things a little bit different. We look at the person's financial needs and we bring back options that will save people for money. People can save money while they are increasing the cash flow. So we help them set up with a proper amount of life insurance here.